Turn the mic up here. That usually helps. Well, good morning, everybody. Welcome to our bi-weekly Berkshire Hathaway podcast segment. Like I mentioned earlier, John Roberts was not able to make it into the studio today, so I'm going to be taking over for him and hopefully not just completely brutalize this, but I'm sure I'll be fine. I got John here with me. He's a professional. And then John Brodeen, and then also Shanna Field with Wintrust Mortgage.
Correct.
All right. Here, let me get you guys over there. Well, I guess what we'll do here first off is we'll just start with you, Shannon. Why don't you just tell us a little bit about yourself?
Yeah, I'm a mortgage loan officer from Wintrust Mortgage. Wintrust is a company that's based out of Chicago, and I'm the local lonely loan officer in the state of North Dakota for the company, where we do loans in all 50 states.
Oh, wow. Okay.
Yeah.
And then I know a lot of people know you, John, but I guess what is your relation to Shanna here? I think today we're going to be talking about how to finance an investment property. So
Yeah.
I think you guys can probably get into that, and I'll just kind of come in with some questions that I might have.
Yeah, I work with Shannon all the time as a realtor. We have we work with lots of lenders, and she always does a really good job. One of the things that makes her different is she's got a team of people, so everything is really, really organized. They're all on the ball. And you know what to expect with them. So, I do probably half dozen to a dozen deals with you every year. She's financed some of my own properties, so I definitely trust her. So that's why I brought her on. So we'll talk a little. One of the questions that we get a lot is talking about financing investment properties, and it is different in some ways from financing your own property. If somebody's bought a house before, sometimes people think it's just going to be exactly the same to buy their first rental property, for example.
Yeah. So an investment property would be like if you were to get a house outside of yours, like a rental or like a business building or something along those lines.
Yeah.
It's a little different. You can have an additional property as far as a second home, and that would be considered anything like on a lake, recreational area, a certain amount of distance away from your primary home.
Okay.
Anything that's an investment property is going to be something that's going to be income producing.
Okay.
Yeah.
So what are the main differences people should expect if they're going to be buying their first rental property? If maybe they have experience buying a house already, but never a rental property.
Right. The biggest thing that most people see is the larger down payment and a little higher interest rate. So in order to do a single family investment property purchase, you're going to be looking at a 20% down payment. If you're going to be looking for a 2 to 4-plex, you're going to be around that 25% down payment. I always kick myself because I've been doing mortgages for 20 years. And when I first started, you could buy an investment property with no money down. I'm like, oh, why didn't I buy like 100, right? Like when there was no down payment, like so dumb. Why didn't I do that? But I was a 22-year-old girl. Like what did I know about investment properties? But yeah, now it's a little bit more of a chunk of change to come in with. But
do you ever see people, so that's a lot of money that people have to come up with. Let's say you've lived in your primary residence for a long time and you have a lot of equity in it. Do you ever see people refinance their primary residence and use some of their equity to put that big down payment on the rental property?
Yeah, I've been seeing that a lot, especially this year with the interest rates so low. A lot of people are restructuring, figuring out different ways to use their equity, whether they're doing some investments, whether they're doing home improvements, whether they're using equity to purchase another property, lake home investment property, etc.
Yeah. And now when you buy your own house, you have to meet certain like debt to income requirements. If you don't have any experience as a landlord, how does that work when you're trying to buy your first rental property?
Yeah. So what we're looking for, we're able to use the rental income on the property to offset the payment, which is really nice. So when you're thinking that you currently qualify for your primary home, usually in order to qualify for an investment property should be the same qualifications because we're using that rental income and basically negating that payment. So
Sure.
which is great. So we just have a schedule that's on the appraisal that the appraiser does and does different homes that are comparable to that property, and then that's how we use the rent.
Okay. So there doesn't have to be a lease already in place, for example. It could be vacant.
Right.
Okay.
Correct. Yep.
And now some people are able to, sometimes people want to buy maybe a duplex with, using their owner occupant loan. They're going to live in part of it. and then rent out the other part if it's a duplex.
Right.
Can you explain a little bit about how that works?
Yeah, no, I actually have a client right now, and he's a 25-year-old guy, hasn't bought a house before, and he's like, I want to buy a fourplex, and I want to live in one of the units, and I want to, manage the other ones, but still have a place to live, which is fantastic because when you do it that way and you occupy the property, you're able to get in on a FHA loan with only a 3.5% down payment. So
That's a big difference.
Yeah,
3.5 versus 25.
25, most 25-year-olds maybe don't have $70,000 sitting in their checking savings account, anything like that. So it's a nice way to kind of get that ball rolling. FHA wants to make sure that you're going to live in the property roughly 1 year is your intended purpose. And then after that, what his plan is get everything fixed up, use that, and then he have that for a strict rental. And then maybe he's going to buy a duplex and do the same thing, live in that one and, kind of roll the ball that way. And, in 5 years, he may have a fourplex, a duplex, and then maybe be able to buy a single family home. He's hoping for a wife and babies and all that stuff. So sugar daddy, right?
That's something that I'd looked into when I was in my 20s. I just never pursued it, but I always saw how, well off people were doing when they had investments, and being able to have like that duplex or fourplex. And basically you just kind of get rid of your own rent payment because you can use the rent from the other tenants to kind of offset yours. So that's just one less bill you have to worry about, and then be able to help you out with that. And then I had another question too. What does FHA stand for?
The Federal Housing Administration. So, and basically that's just a government program.
Okay.
Yep.
And could he continue to do that over and over and over and over until he's got, 10 rental properties or something like that?
Yeah. So it has to make sense, right? So we always have to make sure that, you're not doing anything fraudulent,
Sure.
that you're not doing anything, saying you're going to live in it and not live in it type thing. So if he's moving up in house, that makes sense that his primary home is going to be, a little nicer. But if you're living in a $500,000 house now, and then you want to occupy maybe a $125,000 house that needs a ton of work, we might go,
It's a little fishy.
yeah, kind of what's happening here.
Yeah.
So, and what are you going to do with this house? So I'm going to keep it. Okay. Well, we just
Yeah.
have to make sure that people are being honest.
But
on
if he
kind of
were
what
to
their
live in every
intent
single
is.
one, he could do that for years and build up a pretty good portfolio.
Yep.
That's interesting. And like you said, living rent free, even if you're living, like, let's say the other unit covers your payment for everything except for $200 or $300, where else are you going to live for $200 or $300? That's a great deal because it keeps your cost of living low. You're able to build up a lot of cash, and, maybe next time you have more money to put down, or you have, it's easier to build up the money for the next property. You're kind of killing two birds with one stone. You're getting equity in in an investment property while you're keeping your bills low. So that's, for beginners, that's like, there's lots of books and, seminars and stuff you can pay for out there that'll teach you all these crazy no money down, like how to get rich fast schemes. But probably one of the most sound pieces of advice is just to keep your expenses low, your living expenses low. And this is a great way to do that. Keeping your rental expenses low and you're accumulating properties at the same time.
Right, especially right now when interest rates for a 30-year fixed, you can lock in under
Yeah.
a 3% interest rate. So it definitely keeps the payments low. I get people all the time that come in and I want to be an investor,
Yeah.
but some don't have jobs, or
Yeah.
I'm like, okay, well, kind of need a little income.
Yeah.
There's kind of that fine line, but they read the books and they, like, how can I get going, with this real estate stuff. So it's always good to give them a pathway, so then they kind of know, okay, if you want to do this, it's doable, and here's
Yeah.
what you need. It's job, number one.
Yeah.
And then,
Yeah.
kind of need a little bit of income anyway.
And I really wish that they had podcasts and stuff when I was in my 20s. I mean, if they did, they just probably weren't popular enough to where I knew about them.
Yeah.
Because I would get so angry, like every single month, just like basically like burning $1,500. I would just go there with my check and just be like, I don't want to give this to you. And you do it every single month.
Yeah.
And it's not, I don't know, I think people think that you need a lot of money to be an investor. I've got a client now that maybe makes $40,000, and he has almost 10 different rental properties. And, he has just a W-2 job, but then he's got all this income from these other properties. And that's kind of what he does. He uses equity from one property, refinances it, restructures it, and puts it into another property. So he just finds smaller homes to purchase, finds the down payment from other properties he's already got, and does a lot of the work himself. So it's a great idea.
Now, what if somebody is living in a house right now and, maybe it's an entry-level home and it would make a good rental property, and instead of selling it in order to buy their next home that's going to be their primary residence, they want to rent it out. What are some of the complications and challenges that they're going to run into trying to pull that off?
Right. So we're going to want to see a lease agreement, and then we also want to see a security deposit that's being deposited into their accounts.
Okay.
So back in the day, of course, people were like, oh, yeah, here's a lease agreement done by my best friend or what have you.
Oh, yeah.
Prior to closing.
Okay, so they could find their house, pick it out, and then they would need to get their current property rented out before closing. Right. Do you know how long of a lease agreement that people typically need to have in place?
Yeah, it's usually a 12-month.
A 12-month, okay.
Yep, and then it can be month to month after that, but we're just kind of looking for that initial 1-year period.
So if your entry-level home makes a good rental property, and if you look, it's easy to look on Facebook and Zillow and see what places that are similar to yours are renting for. If your rent is going to be a few $100 higher than what your payment is, that's a good way to become a real estate investor right there too.
Yeah. It's just a matter of just getting that first home going.
Yeah.
Once you buy and once you own, your possibilities of restructuring and recreating things are very good.
Are there any common misconceptions that people come to you with about buying their first rental property?
Trying to think. I mean, just probably, I think usually the sticker shock is just the down payment.
Sure.
Once they see that, then they just, I thought I could do no money down.
Yeah.
So like you could, back in the day when you could do the no income, no asset loans and no down payment and literally give your driver's license and say, yeah, no problem. Yep, all good.
For the stability of the real estate and mortgage markets, it's a good thing they don't do that anymore.
Yes, no doubt.
Yeah.
Hence all the foreclosures that came into play in 2005-ish.
Yeah, we don't want that again.
No. North Dakota was always was never on the high end of the foreclosures. At that time, I was doing mortgages in the Twin Cities market, and that market really crashed.
Why do you think that is that North Dakota wasn't hit so hard by that?
I think that people in general are just more conservative. They want to pay off their mortgage fast. They don't move as often as maybe other markets. I think the national average is 7 years?
Yeah.
That sound about
Yeah,
right?
it is.
That people move. And so I think just a lot of people here maybe just didn't believe that you could do loans with no documentation or no money down. They're like, no, I've got to put something down. So it seems like that's what we ran across.
Good. Yeah, people, I guess, were more hesitant to buy a bigger house than they could afford, apparently.
Right. And I started here at a bank too, and I went to Minneapolis going, this doesn't seem like what?
Yeah.
Like I only need to ask for just approximate amount of what they think they make, and we can just use that. Like, yeah, I do podcasts and I make $100,000 a month. Okay.
I wish.
And I want to buy this $1.5 million house on Lake Minnetonka.
Right.
No problem.
Yeah. No money down. I'm not going to verify any of your information. You're good to go. And that's maybe the North Dakota mentality too. Is just we're trusting, that way. Like, oh yeah, no worries. I'm sure there's somebody out there that does podcasts that make $100,000 a month. So yeah, we'll take that. Makes sense.
Yeah.
All good to go. Sign here on the line.
Joe Rogan does, right? So,
he makes like $80,000 a podcast. It's just something crazy.
Right? Oh my gosh.
Well, we'll get there.
I see that in GFBS's future.
Yeah.
I like it. Yeah.
We'll get on the map.
I'll start telling people that, and then everyone will start tuning in. Like, what are they doing? They're making, bank $100,000 an episode, more than Joe Rogan.
100 million downloads a month or something like that.
Well, I mean, our vision here is to become like the source for Grand Forks for everything. So, I mean, even though we have our studio right here in the Grand Cities Mall, my plan is to be in the old WDA. Was it the WDAY or WDAZ building?
Yep.
I remember it as the movie theater, but
Yeah.
kind of aged myself there.
A lot of people I talk to say they like getting the information here better. Versus the more traditional media. So
you tell that to all the girls.
Yeah, that's what I'll say. So last question for you, Shanna. What does somebody need in order to buy their first investment property? What do they need to have lined up? What do they need their ducks in a row to get this done?
So the first thing is that everybody wants to do is buy a house. So the first thing they come to you, and what are you going to say?
Yeah, get pre-approved.
Right.
Yep.
So you're going to need a loan application. We have a loan application on our website, which is www.mortgagesbyshanna.com. It's an online site. You enter your information. There's places where you can upload your documents. So we are not in the 20 years ago. You do need pay stubs, W-2s, tax returns. We need to know where your funds are coming from for the down payment. You can upload all that, and then what we're going to do, we're going to let you know what your max qualification is. If you have a goal payment, kind of what price point to look for. We're going to point you in the right direction, let you know your down payment options, if there's down payment assistance available, no money down programs, so then you know exactly what it's going to cost you per month to buy the house and how much out-of-pocket funds it's going to be. And that's what everybody wants to know.
And I know every case isn't exactly the same, but is there a good target credit score? If somebody's worried about their credit score, what's a good target for them to try to get their credit score up to?
Right. So the minimum credit score that we have at Wintrust is 620.
Okay.
It was 600 pre-COVID. So that changed a little bit, but anywhere
Is that
from
hard to reach for people?
A lot of times what it is, so we have a credit simulator. So if you are at a 598 credit, we can run the simulator and we can see what it would take you to get your score up 7 points, 10 points, 20 points. A lot of times what it is, it's credit utilization. So if your credit card is running at max, so if you have a $1,000 high limit on your credit card and you have it at $999, your score is going to improve massively if you just pay it down to 50% of whatever your high limit is and try to always maintain it at that point. A lot of times people will say, well, I run it up, but then I pay it off. I pay it off every month. But if you can just work on, if you're averaging $500 a month on your credit, just try to keep it at that amount or increase your high limit so then your utilization is less too.
I was just going to ask that. Is that a bad idea for somebody to ask for a limit increase? Would it be a hard pull on their credit, do you think, or is it normally fine to ask?
Yep, no, that's definitely a good thing, and it's cheaper too, So sometimes instead of, oh man, I got to pay down this $5,000 credit card to $2,500 to increase my score by 20 points, you can always ask the creditor to increase your limit, so now your utilization's less and your score does go up. I mean, we've seen credit scores go up by 100 points just by getting the credit balances down. So it just depends on what you have to work with. Sometimes people have collections or judgments, some of those are a little bit more difficult, but there's definitely a roadmap that we can get them on.
I've had plenty of clients where you've worked with them and gotten them where they need to be on that, and people are surprised how fast they can, get their situation to where it needs to be in order to qualify. And I always say this whenever I'm on here, but the earlier that people get in touch with me and Shanna, the more beneficial it's going to be for them, because we want them working in the right direction. They might have some misguided advice and kind of be working on the wrong things in order to get ready to buy their first rental property. You can set them on the right path and get them working in the right direction so they can buy their first rental property. If they have a goal that they want to be able to buy it by a certain time, we can help them reach that goal.
Yeah, no, absolutely. Sometimes people will come in and say, oh, so-and-so told me I just need to pay off all these collections and then come back in 6 months and recheck it. I'm like, oh, actually, if you pay off collections, now the credit bureau looks at it as a new bad thing and your score just dropped. So it puts you in a worse spot.
And the average person would never guess that.
Well, why would you, right?
Yeah.
You would think you're doing a good thing. Like,
seems
oh man, I
counterintuitive.
have bad debt. I'm going to pay it off and do the right thing, so I don't have that anymore, and it hurts your score.
Yeah.
So kind of a crappy thing, right?
Yeah, one of the ones that really upset me was I had a card, and they tell you, like, I heard that you're supposed to, keep the card because I've had it for so long that it's, I'm trying to look for the word for it, but having
length of account.
yeah,
history.
having that length of that account history. But I'm like, they're charging me so much money on interest on this one, and they have like annual fees, and I'm just like, I'm not even using it. Why am I going to sit here and give these guys $90 a year? Right. Or whatever it was. So finally, I just cut it up, and then I'm glad I did.
Yeah.
But that's kind of stinks when you're like, oh, I don't want this card, but I should probably hold on to it so it doesn't ruin my credit.
Right. Yeah. I always say if you have an account that's been in good standing and you've had it for a long time, to try to keep it open. But sometimes the credit creditors will close it due to inactivity too. They'll close it on you without. Sometimes I'll get a notice
Without
like,
warning.
"Oh, when Sears closed, your Sears card is closed." Well, of course I haven't used it because there's no Sears
Yeah.
here, type thing. So you're like, "Oh, okay, good."
One of the things with what you were mentioning is if there is a high annual fee and you don't want to keep paying it, but you're in good standing and you've had the account for a long time, a lot of times those credit card companies have a free option that you can downgrade to, where they'll keep the same account open, but they'll downgrade you to the free card. And that way you can ditch that annual fee, but keep that line of credit open so it doesn't hurt your account history. So there's lots of different tricks and stuff with credit, and you just need to know them, or else you can end up working in the wrong direction, like the person who was paying down their judgments and should have been, doing something else to improve their credit score.
That's exactly why I should have came and talked to John Brodeen before I tore up that card.
There you go. Paul, do you have any other questions for Shanna about what first-time homebuyers should know, or what investors should know about getting a loan?
I think you guys pretty much covered anything that I would know. I mean, I'm still, kind of new to all this, so I just appreciate the information that you guys give me.
Yeah.
No, it's
Reach out to
pretty easy.
either one of us if you have more questions.
Yeah, and why don't you go ahead and tell us how to get a hold of you again? So if anybody does have any questions that come up, they can certainly reach out to you.
Yeah, I'm located on 47th Avenue across from the fire station, 997 47th Avenue, Unit 4. My website is www.mortgagesbyshanna.com. Our number is 701-738-0651. We do take appointments after hours on the weekends. We try to work whenever John works, which is all the time,
Right?
Yeah.
right? So
That's
we
the truth.
don't really have banker's hours. So
Yeah.
And-
That's one of the reasons why I always feel comfortable when my people are using her, because if something's important, it has to get done, she's going to get it done. Doesn't matter when it is, they're on top of it. So
Thank you.
if people want to reach out to me, 701-213-5428. That's my cell phone number. They can reach me on that anytime. So yes.
All right. Well, let me cue the music that I forgot to mention that everybody will recognize when they start to hear this. There it is. Go to my camera here. All right. Well, so that's going to wrap it up for our Wednesday bi-weekly podcast. We'll be back here again on Friday. Are we going to be back here with you again, John?
Yep.
Oh,
I'll be
all
back.
All right. Perfect. Well, we will see you again on Friday. Thanks for watching, everybody.
Thanks, Paul.